So I wanted to do some analysis on SPY, the 10-year, the VIX, and see what we have going on here. We've got some interesting setups, so let's go ahead and get right into it. I want to pull up the 10-year here. Let me go ahead and adjust where I'm at. We can see that giant, look at it breaking out right there, right off the EMA2 being pinned and rocketing and coming down. I'm going to go ahead and unelongate that chart. I guess it already was. But as you can see right here, it looks like it's ready to make a run. We were discussing rate cuts. Everyone thought that they were going to happen starting now, every Fed meeting for the rest of the year. Not going to happen. From what it looks like with bonds, what they're saying is it's not going to happen. The earliest it could happen is May, in the Fed meeting in May. And I don't see it happening now in about a week, the end of January. I don't see it happening in February, March, or April. And don't be surprised if they don't push it to the end of the year. Keep in mind the Fed is always late to the show, right? And the economy is always late to catch up to the rate cuts and the rate hikes. So we're still feeling the effects of the rate hikes, last year. From the last time we hiked, we're still feeling it, and it's still just hitting the economy and the markets. When they cut rates, it's going to take up to 6 months plus before that first rate cut even hits anything. Some sectors it'll hit immediately, right? And in the market, things are going to react before they cut, because the market will know, gold will know, bonds will know. You can pay attention to those, and that's where I'm getting this information from. So the earliest May, and the latest would be, I would say, around August. Don't be surprised, and then they could go into a massive cut cycle leading up to elections. Every president likes to have the economy doing well and the market doing well. But if they do, they got to kind of start early, which kind of makes sense. What bonds are saying, they're saying May. So, and it's a playbook. Here's the answers to the test. Remember in Back to the Future, what was the guy? Biff. How he gave himself that sports almanac where he could bet and gamble and know every play that of every sport, who was going to win, what the score was going to be, and he became rich off that. It's kind of similar to that. When the Fed tells you what they're going to do when they're going to cut interest rates, because you know that gold and bonds are going to run. Anyways, but if we look at the daily here on the 10-year, we've got a EMA right there. So my predictions are this, that we're going to probably suck back a bit. Let's go ahead and chart this out here. That we're probably going to come back down into this channel and bounce back up. That's just my prediction. We can go ahead. So we're going to have temporary relief. I believe overall we are going down. We have already priced in most of the rate cuts in December, when the market just went absolutely parabolic, gapping up, ripping ferociously. What was it, 8 or 9 weeks? We just went vertically up. It was wild. 10 years popped up a bit, and it's pulled bonds down, it's pulled metals down, and it's pulled the market down a little bit. The market's pretty resilient, especially with all this AI stuff and the top 10 stocks in the S&P having to do with AI, especially Microsoft, is really keeping things propped up. This is the 10-year yield. Let's go ahead and take a look at SPY and what we have going on here. Let's go over to the weekly chart. You take a look at this. Before, this is where I had charted this run back in October, that ferocious run. Right off this EMA and this trend line right here was a dead giveaway that we were going to go up. I caught that. Sold too soon, unfortunately, but this isn't looking good. We're getting very, very tight in here, if you guys can see this. Very tight. So I'm expecting us to probably break this at some point and come down to this possible volume shelf over here. Maybe even these EMAs, the 100 EMA. And if we go ahead and take a look at VIX, one second. VIX is peeking its head out. I really don't use VIX too much. VIX is a sometimes lagging indicator. I want to know what the 10-year is doing. If you know what you're doing, you're going to be using the dollar and the 10-year. Unfortunately, I can't pull up Dixie, money sign DXY, on TrendSpider, but I can pull up UUP, which kind of gives us, an indication of where things are going to go. Look at that beautiful hammer right there. Clear as day. That's when you would have gone short on bonds and metal, especially bonds like TLT, ZROZ. TLT is more liquid with their options, but massive gap here. When we announced rate cuts, it just pulverized the dollar. I mean, it really overreacted, and you can see how low RSI is. It's going to come up maybe a little bit more over to this area, I would say, in here. But overall, I see it rejecting and coming down. So to do a recap on my analysis here, let's go back to TNX on the daily. Weekly, this thing's going to yank back a little bit, but I see us popping up a little bit. When the market realizes that we're not going to cut interest rates, I believe that the dollar and TNX with this next Fed meeting are going to make a run. Shouldn't be for too long. Maybe it's going to chop around and melt up a bit for about a month. After that, I see us peeling off because eventually we are going to cut interest rates. This 10-year is going to plummet down to here. Who knows how far she's going to go. Let's go ahead and take a look at it on a monthly real quick just to see what we see here. Yeah, you can see we pretty much ticked where we were at back in 07, but yeah, so I expect us to come meet these EMAs down here at some point. Look how low we were during COVID. That's when we were really exploding. This peaking area over here is when we dove in 2022. So yeah, I expect us to reject here, come back down, and bounce into this channel and stay in this range and bounce around for a bit. So this is where I expect us to go. Right down into here. And I expect us to bounce back up after that. Let's go ahead and do some sloppy charting here. And I expect us to bounce back up before rejecting again and eventually breaking that channel and going down. So follow the 10-year, guys. Also pay attention to the dollar. You guys are on TOS, money sign DXY. This is how you really chart the market and figure out where the market's going to go. You don't just chart SPY and then think you're advanced because you use VXX or VIX. Let's go back to SPY here. Look at that beautiful break right there with the downside and the inverted hammer to rip back up. But anyways, we overall, looking at this on the daily, I really think I was wrong for us to continue down right there. I was not right on that. I was right on our break. We had that inverted hammer here. I still think we need to fill this volume gap. Look at that massive gap on the volume there. I think we're gonna fill it. 459 to, let's say 456 to 459, in that range. I believe that's where we're gonna go. Let's go ahead and chart that out right now. This is where I believe we're gonna go. Let's go ahead and change that color there. I sound like the painter. Remember the guy with the afro in the early 80s on the public television that was free? But this is where I believe we're going to go, is right down in here. We're showing some weakness up here now, and it's chopping around. We had massive bearish divergence with this bearish pattern right here for that break. But again, we're not looking good. That doesn't look good. We definitely ripped up yesterday and today, but I mean, we could come back up to around all-time highs again, but I don't think that we're going to break it, and ultimately we're coming down. So if you guys like this content, make sure to like and follow for more.